First corporate then we have on the show. Jana Small Finance Bank is on our radar. The company's Q4 profit has declined by 61% on a year-on-year basis. The net interest margins declined both quarter-on-quarter and on a year-on-year basis. We have with us Ajay Kanwal, Managing Director and CEO of Jana Small Finance Bank on the show now. Thank you very much, sir, for joining in. If you could give us some indication of how you expect FY26 to pan out in terms of growth, in terms of margins and even the asset quality. What do you anticipate?
So first, a very good morning to you, Reema and Hormuz. I would like to start with a request that you please change the reporting on the Q4 and the year. And my submission to both of you would be that take away the deferred tax asset out of the year-on-year performance.
Okay.
Because the deferred tax asset doesn't tell you how the institution is performing. So it tends to mislead folks, which is what you're showing on the screen, which is fall of 61%. And deferred tax asset goes with what we've been carrying from the past. And so I'll give you a simple number. Between the two quarters, DTA in Q4 last year was 155. So it was adding to the profits by 155 crores. Deferred tax asset this year is 28 crores. So you see just 4 crores for the quarter. So it's a 151 crore difference in deferred tax asset between Q4 last year and Q4 this year. If you just add that back, the profit is positive. So that's the first most important thing. The second most important thing for everybody who's following that is we have accelerated provisions. The reason we have accelerated provisions is purely because we would like to keep our net NPA below 1%, gross NPA below 3%, and that allows us to apply for the universal bank. The criteria for universal bank application is 2 years in a row we have to be 3% and 1%, below 3 and below 1. And to meet that criteria, we have to accelerate some of our provisioning, which is also what we have done both in the Q4 and the year. So I'll just give you the other number on accelerated provision, which is very important to hear. This year, we have done accelerated provision of nearly 305 crores, over and above our PAT. So my first submission to both of you and to the analysts who are helping write these headlines, that it will be probably better if you just look at these two aspects and then do the reporting, because if you just report fall in 61%, then the people who don't really go into the details, which they expect that you all will not be getting a good picture or probably the correct picture.
So we got that point. We look at the profits X of the deferred tax assets. But can we focus on some of the other, what you expect in terms of growth and even in terms of net interest margins? Because we've seen a sequential decline and a year-on-year decline there.
So Reema, growth this year was 19% on the asset side. We have guided that we'll do 20% on the asset side next year. But let me tell you the most important part. This year, our growth in secured assets was 40% year on year. We had a decline in the unsecured book, which was largely MFI, by minus 11%. So I really want to say this again. We grew 40% secured asset, minus 11% on unsecured. For this financial year, we'll do literally similar. We don't expect a decline in unsecured assets anymore because the worst is over. But we do expect a very healthy 30% plus growth in secured. So we will grow assets by 20%. On the deposit side, this year we have grown 29%, CASA at 18%, retail at 19%, and the rest is bulk growth. So we have had a very strong deposit growth this year. Our surplus cash is about 2,800 crores on our books on 31st of March. So yes, we should see very strong asset and deposit growth this year. Focus areas will be secured assets. Focus area will be CASA and retail deposits. On net interest margin, we have declined to 7.7%. And like I mentioned, we have had a negative growth on our unsecured book, which is largely MFI, which has caused a decline. So the MFI book doesn't decline this year, which it should not, or grows even slightly positive. NIMs will improve. Cost of deposit will get better this year. As you know, there was stress in MFI last year. So interest and suspense should be less this year. So if we take a combination of all three, our NIM should get better this year. Also, I must add, every passing year, our secured book is growing. So the number is March 24, we were 60% secured. March 25, we are 70% secured. So yes, as we grow more and more secured, NIMs will start compressing. But the compression this year is largely due to negative MFI growth, which should get, a lot of it should come pull back during this year.
Mr. Kanwal, good morning. Thank you for joining in. So 70% secured by in FY25, so 80% secured by FY26.
Almost I wish, but as you know, our balance sheet now is roughly about 30,000 crores in assets. Every percentage point is difficult to move. Last year was a bit more sweeter because of the negative minus 11% growth on microfinance, which is not what we normally do. We normally grow by 1% or 2%. So if you take our microfinance to
We seem to have a patchy line there. Mr. Kanwal, please finish your point, sir. We just had a patchy line with you.
Sorry, what I said is it will not become 80 so fast because the size is much bigger of the balance sheet. Also, this year we had a minus 11% of microfinance, which we don't anticipate this year. So, yeah, expecting between 73, 74, 75%, that should be the range where we will finish secured.
So the worst of the MFI's stress is over, is what you're saying. So would that stay in FY26, saying that the worst is over, or would you start see things turning for the better in this segment that has seen a lot of stress over the last 12 to 15 months?
So I think for the better, I would probably put in second half next year, purely because we had some blip coming across the industry from Karnataka. So we have a few geographical pockets which, don't seem to be, wasn't a problem in the past, seems to be indicating some challenge. So I would think that, listen, hard work continues, at least for the first half. Good news is in Q4, our microfinance book has actually grown by 0.2%. Now, I'll tell you what growth means for us. It doesn't mean the book is growing in the profit. That's all secondary. Primary is my collections people who are responsible for giving more sales are feeling comfortable doing sales, which is why my book is growing. That means the last mile Jana employee who's in touch with clients is now comfortable to grow. That is a most positive sign you should see. And which is why we are very enthused that yes, microfinance will have a much better year than last year. But would I take my eye off the ball? Am I very comfortable? Am I doing 99%? No, we are still at 98.5, 98.6. I just need the last bit to come in. Then I'll be a lot more comfortable.
What about asset quality? You managed to bring down your gross NPA in the March quarter to 2.71%. Does the downward trend continue?
So listen, our asset quality primary driver from, we were lower last year. It became a bit more deteriorated primarily for microfinance. So as microfinance changes, we will obviously get better this year. Second, I must tell you is that the secured assets are very predictable and very clear in how they operate and what to expect. So I would suspect that yes, our gross NPA and net NPA should be on a better trend this year too.
Have a number in mind? Do you think it can head down to say 2.5?
We'll try as hard as we can. I don't want to commit a number because, I'm a bit more like, let's watch MFI for first half, but I'm sure we'll catch up again. And then I'll tell you more of it. I only have one request, and I'm sorry being repetitive. This falls 61%. Every time I see it, I feel very bothered. Please have someone have a look at it.
Yeah.
Sure. Mr. Kanwal, thank you so much for sparing time and joining us today. Wish you good luck for
thank you so much
the full FY26. That was the management there of Jana Small Finance Bank. And the stock, though, recovering from the lows of the day. We'll take a short break. Up next, we'll discuss what's buzzing in the commodity space. Manisha Gupta joins in. Stay tuned.